Hello everyone and welcome to Inderes TV. Today I have the CEO of Eltel, Håkan Dahlström, here with me today, and we're gonna discuss the latest Q1 earnings report that was released earlier today. Welcome, Håkan.
Thank you.
All right, let's start with the broader context. We have increasing talk of tariffs and trade barriers and heightening geopolitical uncertainty. Given that, how is Eltel positioned in this changing landscape overall?
We have more than 90% of our business in the Nordics, and with that said, we don't have a very strong dependency to the sort of disturbancy that we see around us, but of course we are not totally independent. Most of the material and things we are dependent on is from the Nordic or from Europe, but we have some examples like solar panels, transformers from most likely they are imported from China, and we believe that that will also be the case going forward. So of course some dependency to supply chain and that the trade with China would continue in a reasonable way.
And let's shift gears a bit and talk about the latest Q1 earnings report. What were the key highlights from the report?
Yeah, for me it was a strong quarter. If you look at the adjusted EBITDA, driven by both business areas, so both communication and power are contributing, and also that 3 out of 4 segment is delivering in this quarter. The seasonality we have is normally giving us a difficult start of the year. So with this quarter, we have a good start of this year, and I would claim that this is the best first quarter in like 10 years.
And in the Q1 report, you presented a new segment structure where you bundle Denmark with Germany. Why was this important move for you? And could you also talk about the economics of the Germany country unit overall?
Our 4 segment is what sort of we have as our core business, and the operation in Germany have been reported before as part of other, together with a high voltage operation in Poland that we divested for a year ago. But now coming to the conclusion that we see a possibility to leverage and simplify the structure, also using our Danish management team, also for the German operation. The content of the German operation is smart metering, very much similar to the smart metering operation we have in Denmark. The performance is solid both in Germany and in Denmark. So I see that we have the capacity in the Danish management team to do both Germany and Denmark, and so with the same level of performance, I would claim, we have seen a possibility to combine them and also send the signal that our German operation, with the great performance they have, is a part of the core business in Eltel.
And you have talked about this wait-and-see market dynamic within the country units before. Would you say that the current macroeconomic landscape has worsened this situation, or is the demand picture more or less the same as before?
Yeah, the wait-and-see market I talked about in the fourth quarter, it has not improved, if I say so, in the first quarter. Particularly the last 100 days have, of course, made many people and decision makers a bit hesitant to take new decisions. With our business mix, I would say that we have not been impacted so far. Will we be that in the future? Maybe. But I would say that with the broadening of our customer base, especially towards public infra, I think that we are more resistant to that type of fluctuation than we would have been with our traditional scope. But so far, no big impact. But of course, very few big investment decisions taken in the first quarter.
Let's talk about Norway, which remained quite weak in Q1. Do you assess that already implemented measures and downsizing activities will be sufficient to steer the company back to profitability in the coming quarters, or do you see additional measures needed to be taken?
we could sort of divide this in two different type of activity. Like we have what we can deal with internally, cost reduction, resizing, and that sort of thing. And I think that with what we have done now in April, I would claim that we believe we are now where we should be in the structure and the size of the organization. So I don't foresee more of that. But we also have to be more successful going forward in winning new contract. We had the opportunity the other day here to announce one important contract with the Defense Material Administration in Norway, and I would like to see more of that, broadening the customer base also in Norway. Public infra is a great place to be, so I expect more of that going forward.
And Q1 2025 marked the 7th quarter in a row where you improved the profitability on a year-on-year basis. What do you view as the biggest risk for Eltel to lose this momentum going forward? And on the flip side, what could actually accelerate the momentum that we have seen the past quarters?
I would claim that if we have to keep the focus on operation excellence and commercial excellence, and of course if we allow ourselves to lose that, then of course it can go south quite fast. But I would say that we now, over the couple of last 2 years here, we can see that we have come into better control. We are following our activities and project very closely. I don't experience big negative surprises in the same amount, or I would claim lately we have had no negative surprises that is sort of sizable to talk about. So I would say that this write-ups and write-downs that we do frequently in our project portfolio, and with this project portfolio we actually mean all our activities. So all work orders, everything we work on is treated internally, followed up internally as a project, and we see that there is very minor surprises and deviation from the plan. So I'm really happy for that, but of course it's about us keeping up the right leadership culture, that we are able to keep our skilled people. So it's not something we can take for given going forward. But I will claim that we are in a quite stable situation now. And if this should be sort of, if the improvement should accelerate, I think it has to start being even more successful in the market when it comes to pricing and gaining market share in the new areas that we are more and more looking into.
And expansion into new and adjacent market is an ongoing priority of yours. As we move further into 2025, and we are already in the mid 2025 soon, what type of opportunity do you see as most realistic near-term growth, and where should investors look at in particular? In which areas in this new and adjacent markets do you?
I think that the proof point, if we continue successfully doing our transformation, would be gross profit. We have to continue improving gross profit. It starts with that, and that has to be based on a new contract. I believe that the area of energy storage, e-mobility, meaning electrification of all transport, these two very active areas. We have a lot of discussion ongoing in those. But I think also we would see a few new solar parks project or similar, also important in high voltage transmission line substations, that we get our fair share of what is happening in the market. Because as you hear from all over in media, there is a lot of activities ongoing in the energy sector, and we want, of course, to make sure that we have a larger portion of that going forward.
I thought we could take a step back and reflect on the bigger picture, on your current strategy, which was fine-tuned in 2022, and look how it has performed from a financial standpoint. So what we can see is that between 2022 and 2024, gross profits has grown by over 20%. Adjusted EBITDA has turned positive. Net debt has decreased by a big margin. and you have also improved the working capital significantly. While 2022 was challenging due to cost increases, could you just briefly walk us through the key drivers behind this positive development that we have seen in the past quarters?
I will start saying that I would claim that the strategy was really a big shift for us. It was a completely new strategy that we launched in January 23, and that is started to become visible in the second quarter 23. From that, I think we have a significant improvement in all financial terms, as you indicate here. I would claim that the root cause or the reason behind the improvement is operation excellence and commercial excellence in our core business. So, of course, even though we are now happy for 6% of the revenue in the first quarter coming from new and adjacent business, it means like 94 of the revenue comes from what I call classic business. And it's only by doing operation excellence and commercial excellence in that part of our business that we can improve our profit. And I would claim that that has been done, and I'm sort of happy of the development and the trend in 3 out of our 4 segment. Of course, I expect Norway to do better and have a more positive trend going forward than what we have seen during the last 2 years. But I would claim that the commercial excellence and the operation excellence that we can see in Finland, Sweden, Denmark, Germany is why our financial position is so much better today than 2 years ago.
And finally, giving all this uncertainty, what should investors focus on in the upcoming quarters to evaluate the development of Eltel in the near to mid-term? Where do you see most risks, and where do you see most upside potential going forward?
Most potential I see in this new and adjacent business, and here, of course, we will try to keep you informed by our communication when we gain something there. But I think this is a great opportunity for us. We all know how important critical infrastructure is for a society, and the blackout in Spain earlier this week is just reminding us how important it is, and we are all so dependent on this. Of course, all of this new increased investment in this area will also be an opportunity for us. So yes, we have ambitions, and we will grab our part of that. On the risk side, of course, if our customer feels that their business is becoming more soft, it's natural that they reduce investment level, they reduce activity levels, and that would impact our big frame agreement. So even though we have the frame agreement and we have a really tight and close cooperation with them, we have also to understand that if they see that their business is becoming soft, they will reduce the volume that they want us to do. And that, I would say, is the risk side of this.
Håkan, thank you much for joining me today, and thank you for watching.
Thank you.